Quantum computing stocks like IonQ are getting and gaining great investor enthusiasm as the companies are deemed essential for national security and could be the next catalyst, the next big investing trend following artificial intelligence in future years. That being said, IonQ stock has faced some headwinds over the recent month or a little bit more. And some of the reasons for that were, Amazon sold its stake completely in the company. Amazon was formerly an investor. And then in early December, you had shareholder Kramer, who announced sales of 1.4 million shares of IonQ stock. And so that negative sentiment drove down the price, even though the company reported solid revenue growth and actually reiterated and increased their guidance for 2025 for revenue above 110 million. That's up from 100 million previous estimate. So I'll look at the company's longer term trend and answer if I think it's a buying opportunity for 2026.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So evaluating its revenue since 2019, IonQ generates the most in terms of quantum computing revenue out of all of its peers in the industry at 79.8 million. It's also one of the few quantum computing companies that's consistently generated revenue growth. I evaluated Rigetti this morning, one of its competitors, another quantum computing company, and its revenue is actually declining. And so IonQ demonstrating revenue growth. And given that it's very early days for these companies, they're not generating any commercial revenue. Their revenue is coming from research and institutions that are conducting research, trying to develop and further this technology, not yet utilizing the technology as of yet in commercial applications, which is the catalyst that I believe will unlock huge value for quantum computing in the industry overall. So these quantum computing companies, IonQ included, are losing significant sums of money on the bottom line. And so the balance sheet becomes increasingly important. Now, IonQ has recently been able to raise more capital, as have many of the quantum computing stocks. Their stocks are up huge over the previous 12 months and 24-month periods. As I mentioned, quantum computing stocks became really popular with stock market investors and the prices exploded higher. The companies took advantage of that to sell some of those shares at those high prices to fortify their balance sheets. And IonQ now has 346 million in cash and equivalents on the balance sheet. That's nearly the highest ever, going back only a brief moment in 2021 when it had roughly 400 million, but that was more than 3 years ago. And it's over those years, it's furthered its research, made more progress on qubits and qubit developments and error correction, and now still has almost as much money as it had in 2021, but it's 3, 4 years forward in research. It's also important to look at how much cash the company is losing to determine if the cash it has on the balance sheet is sufficient to give the company runway to hit the next milestone. And in the most recently completed 12 months, its cash flow, free cash flow, worsened meaningfully. It lost 259 million in cash, in free cash outflow. That's more than double what it spent in 2024, where it was negative 124 million. That was up from negative 93 million and negative 54 million the year before that. And I suspect there will be at least, I want to say, 3 more years of huge negatives in free cash flow for the company as it continues to research and develop the technology, and the revenue remains insufficient to offset those huge investments in research and development. So at 259 million compared to the cash balance of 346 million, if it maintains this pace of loss in free cash outflow, it has more than a year remaining of cash on the balance sheet. However, it looks like it's spending more money and losing more money every year. So I'm not sure if this is enough capital for the company to persist in developing the technology at this pace of development. And if it fails to raise more capital from investors, it might need to slow down the pace of development. In other words, hire fewer people, fewer scientists, fewer researchers, and thereby slow down the development of improvement of the technology. But if the company remains popular with retail investors and they're able to continue selling stock to raise millions of dollars, then the company can continue developing the technology at this pace. So all that being said, do I think IonQ stock is a buying opportunity for 2026? I don't think so. For me, it's too speculative. There isn't enough evidence for me to evaluate to determine what the value of this company will be. So there's a lot of variance in determining valuation, and all that speculation is uncomfortable for me. I prefer to make investments where I can calculate the value more effectively with less speculation and less variance in the potential outcomes. But I understand if investors like this opportunity to take a chance where maybe it could 10x or 50x or 100x your investment if you get fortunate and pick one of the quantum computing stocks that turns out to be the successful one amid all of the competition. For me, I have the stock rated as a hold. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.